In January 2026, real estate forecasters predicted a sluggish year for apartment living in Edmonton. What actually happened in May caught them completely off guard. This chart shows the pivot. After years of flat movement, apartment-style condominiums just posted a staggering 6.5% price increase in a single month. The average condo price now sits at $225,842. While condos surged, detached homes held steady, seeing a negligible dip of 0.1%. That brings the average house price to nearly $589,000. The math for first-time buyers has reached a tipping point. The price gap between a house and an apartment is now approximately $360,000. The 6.5% jump marks a market reset. After a decade of being undervalued relative to the cost of construction, condo prices are finally catching up to the reality of 2026 inflation and population growth. Three factors are driving this rally. First, the Bank of Canada held its policy rate at 2.25%, providing the stability buyers needed to move off the sidelines. With 5-year variable mortgage rates as low as 3.4%, the monthly carrying cost of a $225,000 condo is now significantly lower than the average Edmonton rent. Then there is the affordability bridge. For many young professionals, entry-level homeownership no longer means a bungalow in the suburbs. It means essential condo. Finally, out-of-province investors are returning. They see Edmonton's $225,000 price point as a high-yield opportunity with low entry barriers compared to the widening price gap in Calgary. The demand is real. The question is whether buying an Edmonton condo is your ultimate stepping stone to equity or a trap of rising fees and shared strata risks. This comeback is concentrated. The highest demand is currently hitting 3 specific micromarkets. First is the University District. Garneau and Strathcona remain perennial favorites due to high demand from students and medical professionals at the University of Alberta. Second is downtown and Oliver. The new warehouse park has revitalized the central core for buyers seeking a walkable lifestyle in the high-rise warehouse district. Third is the West End. Savvy buyers are picking up older condos near the Valley Line West LRT stops, betting on future appreciation. This is the transit premium. Investors are buying now to capitalize on the increased desirability and higher rental rates expected once these lines reach full operational maturity. Targeting these 3 zones locks in lifestyle convenience, but you will pay a higher upfront premium compared to more peripheral neighborhoods. There is a disconnect in the data. Why are condo prices rising when overall real estate inventory in Edmonton is up 31% year over year? That inventory is dominated by detached homes. In contrast, the supply of turnkey condos in central and university-adjacent areas is being absorbed rapidly. This makes your due diligence critical. You must rigorously review reserve fund studies. Ensuring the condo corporation has a healthy rainy day fund is just as important as the square footage. You also need to scrutinize insurance deductibles. With more extreme weather events, manageable premiums are essential for long-term affordability. There is an alternative, house hacking 2.0. This involves purchasing a new build in an area like Laurel that features a legal basement suite or a side entrance. Renting out a portion of the home can cover a significant chunk of your mortgage, allowing you to enter the detached market using a strategy favored by many first-time buyers. Your choice is between the low-barrier, hands-off entry of a condo or the higher capital requirements and active management of a house hack. You can navigate this market by mapping your situation onto this framework. For the bridge buyer priced out of the $589,000 detached market, a $226,000 condo is the primary path to equity, provided you prioritize board financial health over cosmetic finishes. The yield investor should target the University District and downtown for high rental demand, but must heavily scrutinize the insurance deductibles of older buildings. The house hacker with enough capital should skip the condo market entirely. Buying a suited detached home in the suburbs provides the maximum long-term leverage for those willing to be an active landlord. The wait-and-see period for Edmonton condos is over.